guys. I hope that you had a wonderful weekend. We're going to basically cover the trades of the week. That's the weekly recap for the week started on the 8th, that ended on the 12th of June. It's been a particular week. This is the first week that we've seen in quite a few weeks where we had like a down market, a general market. The S&P went down on quite a heavy volume. So we'll review a little bit the market, what happened on that week. We'll review some of my trades. And that's it. So let's get going. I'll just get rid of the camera so that you can have full screen and it's better for everyone. All right. So the S&P, our sweet dear S&P. So like I said, this was the first week in what? 1, 2, 3, 4 weeks, 5 weeks that we haven't had like such a big red candle. And not only a red candle, but like you can see that we get the typical engulfing pattern that I usually like to trade, which means that right now the market basically settled down on moving average 10, 20, 50 weekly. And it's going to be interesting to see how we're going to basically shape up this um, this week, this coming week. Now, let's have a quick look at the daily. The daily, basically same kind of thing. We've just basically moved down, moved below the moving average 1020, and now we're going to just basically come and hit the support, big support, price support, which was, the break area. Do you remember that break area that I've been talking about loads of times, which was around 295, 298, that break area that we had in SPY before we started having the market going back up again after the big consolidation period, where I tried a small short. Now, we'll see the market. The market's basically right now on the pre-market is trading 296. It's basically finding exact support on moving average 250, and that's going to be key. I think that's going to be key to see whether we're going to see some kind of bounce or whether the guys are going to basically try to take it further down with on heavy volume. So we'll see. It's these are important levels for the direction of the market. If we can't basically hold this level, bounce back, and even if it bounce back, we're going to have to basically go and really try to close it up above 306, 307. Really, the big level will be for me the high of Thursday, which was 311. So if we basically bounce back, which might very much be the case, start trading just above the moving average 1020 on a daily basis, which is going to be around 37, 307. But ultimately, we need to close up above 311, then okay, I could see a continuation pattern, and then aiming at the all-time high on the SPI around 340. If not, then I would say that we're gonna go lower, and we're gonna also next resistance, not sorry, next support levels that we're gonna find is gonna be around the 273, 280, 284, within that basically 10 points range. That's where I think the market will try to settle next. But that means that we've got potentially another 15, 20 points downside if we can't find some decent support in that. All right, so let's move on to the stocks that I've traded. So BDRY. So BDRY, you know that one. We've had this one on our screeners for a while, and it's a pure economic play, like I say. But so far, there's all the factors. Look, this obviously the BDRY is the only ETF that represents a pure play on the freight rates, and the freight rates, like as you know, have been on a down market for quite a while. Um, I think, well, I don't have the picture. I mean, I've got the picture only on because this ETF hasn't been trading for such a long time. But you see, the trend. Last year we had a good bounce on this again. That's the sort of bounce that I'm trying to play. Whether we're gonna get some kind of recovery from China imports, whether we're gonna have like some adjustment that we've seen in the overall fleet, and kind of pick up in demand for dry. So, but that's the sort of play that I'm aiming at. Obviously, the big levels, the big next level is going to be moving average 20 on a weekly basis. And that's my next kind of level that I'm looking at. So this is it. I traded this thing on the 9th of June. I was on Tuesday. And what happened is that on the week before, I was trying to buy on that day. That was on Friday. Unfortunately, I was waiting basically to buy the market around the 520, 515, 520 area here. The market basically opened with a gap up, traded all the way down, and I think the lowest that we'd seen on that day was 524. So I was not executing on that. Then it started bouncing back up, and then for me, I didn't have much of a good risk reward because I had moving average 50 right above my head, and also this price level of 569, 570. It was kind of confluence as well of the moving average 50. So I didn't basically chase it up. But what happened is like 2 days later, on Tuesday, we talked about it on Tuesday in the morning session, but then in the afternoon, the thing opened basically with a gap down. The gap down was basically right in the middle of my price cluster support area between 5 and 510, that area. Plus, it was just hitting the resistance of the support, sorry, of the moving average 10 daily. So that's when I got interested. And let's just see. Um, so that was on the night, okay? All right. So that's the sorry. So that's the 60 minutes bar chart, and that's the day where I came in. So I liked it because, again, confluence of moving average, 10 daily moving average, 50 on 1 hour chart, confluence of this price congestion support area. So, and on top of that, it was basically trading right in the midst of, where I was trying to buy it on Friday. It was like 515, 520. And what happened is that go on the 15 minutes. I could have bought it and again, 15 minutes I had like also the price found support on moving average 200. So look, I could have gone and take a uh, take a punt on the moving average, with moving average 200 15 minutes. I waited a little bit. I wanted to get a little bit more confirmation on that. And what happened is basically I waited for the OPR breakout, OPR 15 minutes, and that's why I got in. So I got in on this thing at 525, and I put a 20 cents stop. So just basically, just around like or 25 cents. I don't remember, but basically just below that level, below the sort of like five-ish level, which was plenty, to get myself. And also, if you look, the ATR at that time, two ATR was about on the 15 minutes at least was 10 cents. So I had plenty of. I think I took a 20 cents stop loss. So on that candle, couldn't do anything on that day. As a matter of fact, the market basically kind of like got stalled, around that level of price resistance, then started trading back down. I thought, maybe it doesn't look that great. And then, next day it opened with a gap up, and that's where I got executed on my first CP at 545. And I was working my next CP, like I said to you, at $6.30, which got done, on Friday. I think on that candle I didn't mark it, but that was on that candle. Yeah, the high was 620. No, sorry, $6.30. When did I get done? I got done basically on Friday. What was the Friday's high? Let me see here. Friday high was 633. I got done somewhere here. Okay, so I got my TP2, and right now I'm going to be working my TP3 at $7.45, which, let me go back to the daily, represents, I think, um, that area here, just around like around 7.5. And by the way, let me just add it. I don't know why I used to have it. It's kind of disappeared. Exponential. Sorry guys, I want to add. I used to have my moving average 100. I don't know why it kind of disappeared on me. So let's just do it here. I'll just edit. Just want to make it slightly line width bigger. Yeah, we're good. So yeah, because that area also was corresponding to to my the confluence of price first price resistance and moving average 100. So that's going to be my TP3 that I'm working on right now. I don't know if this week the market's going to keep on pushing above, and be quite strong like it was like last week. We'll see. At the moment, I've left my stop loss at break even, and we'll see what's the next move. So I'm just basically riding the wave right now. Let's have a look at this stock as well that I still got. I'm still holding for quite a few days now. That's SE C Limited. So nothing really going on that one. I mean, if I look at the weekly, still on an uptrend. The market kind of like basically when the high of last week was of this week, sorry, was like 94.50. And I keep on basically working right now a stop loss with the moving average 10. So still in the position. My stop will be around 88 and a quarter, and we'll see. Nothing. I'm just basically trend following that market at this stage. On that position, SE, I've had like several ins and outs, and TP1, TP2. Just check at the. So this was the levels where I came in most of the time. So I think I've been long around the 76 and 3/4 in that area. I forgot, but this is um, this is an ongoing like kind of like trend following type of trade. Obviously, the fact that the market hasn't managed to basically make a new high in the past three sessions, and every time, even like on Friday, he managed to basically gap up big time and do like kind of like a fake breakout, and nothing happened on that. So it's not super encouraging. I'd probably say that it's a good chance that I'm gonna get done on this stop loss. Well, it's not stop loss, but stop gain this week. But we'll see. You never know. You never know. Not here to kind of like say what the market is going to do or not do. I'm just basically following my process, and my process right now, tells me stay with the trend. It might be good. If I was purely day trading this thing, obviously, I would have basically got out a few times, either Thursday or Friday. But I'm not. I keep basically the remaining of my position on the trend following basis. So we'll see what happens. Now let's turn to HTZ, so Hertz. We've talked about it on uh, on Tuesday this week, and we said that there was a potential long on the pullback, or we would look at the OPR. The idea was basically to get like a stop loss between below $3.50, something like that. So I know that some of the guys have taken a nice scalp on trade. If, for those who haven't seen that, the part of the coaching session on Thursday was also covering one of the trade that Isaac took. Great trade, by the way. And okay, the idea was that we had this day here that came. That was the daily. That was on Tuesday. Okay, so that was the day we opened with a gap down, and the market basically went all the way back to that area of 320, 340, which was a big area of price support. Um, and if we look at the intraday chart, that's on the ninth, that's the first candle down, the first opening candle on the 1 hour chart. Um, Again, we're playing that bounce, that area of 320, 340. The fact that we have the moving average 20 landing some support. So that was the idea, to play a quick bounce back from this and trying to aim back to to sort of the high of the market, or whether we could do it or not. So Isaac took the trade that Isaac took. Let me just go on the so let me go to the 5 minutes bar chart, because that's also the chart that I took myself, that I use for my entry. So again, you will find more details in my comments on Isaac trade on HTZ. But basically, what he did is basically he came in here on the bounce. He was playing the bounce, literally the bounce of the moving average 200 5 minutes. That's where he came in. Okay, so convergence of basically moving average 20 on the hourly chart, moving average 200 on the 5 minutes bar chart, the price level support that we had at 340, and that's where he got in. I think he got a great execution. I didn't get that great execution because I didn't play the bounce literally from the moving average, but what I did is basically I waited for the first 5 minute candle to hit this moving average 200 bounce, and then I waited for the second candle, and that's when I came in. That's when I came in around 386. I had a stop of about 50 cents, which was just it was about basically it was about one ATR. Okay, it was like well, I think the ATR was around like 40, yeah, 40 cents, 50 cents. So I can't remember exactly, but I took like a stop, like no, 50 cents stop. That's what I took, uh, which was basically about 330, $3.30, around that level here. Okay, that's yeah, I remember. So my first TP1 was done on the same candle, because this candle was like the high was 444. So TP1 was done on that first candle, then got put my stop at break even. Um, what happened is like the rest of the part of the after that trade, after the TP1 was made, the market kind of like hit the moving average 55 on the 5 minutes, and then started trading back down, and even like went below VWAP, and I thought, looks like I'm going to be toast, and I'm going to be stopped at break even. But that's part of the game. And that's why it's important that you secure a first trade, a first target profit, covering a one-to-one risk reward, because at least when you get that, you get something. Whereas if you basically immediately aim for the big home run. Like let's say, oh, I want to buy that, and then immediately, I don't know, it's going to go back to the whole eyes and the market, and sometimes that's where people they just basically end up being stopped break even or not making any money at all. And that's the way that I used to trade. I used to trade this way, silly, you know, when I was younger. But then I understood one day that there's more value in taking and cashing in from time to time because it helps you psychologically to hold the trade longer. And even though it's not easy, because when you see the market basically moving, bouncing back and pulling back from moving average 5 minutes all the way down almost to the break-even, my break-even level, it's not easy. I mean, humanly, you want to basically think, oh shit, maybe I should have taken everything out on moving average 50, etc. And yeah, the market basically bounced back, and my second TP, my TP2 was here, just below 550. It was like a 545 around that level here. And so that's why basically I got out of the position. Again, the idea was really, like I said on that morning when we made the plan for the day, it was really to play a scalp on that. It was nothing more than that. So quick and easy, nice trade, and we'll see what happens this week again. But I believe that generally speaking, we've seen a lot of people. I mean, from the list of the Robin Hooders, the traders, like I said, we talked about it as well, I think on Thursday. But the Robinhood is this big platform, broker platform, which was the first one that came out with zero commission when everyone thought they were crazy, and they set the trend. But they attracted a lot of people, a lot of retail traders like ourselves. I don't know how good the platform is. I've never tested it myself. I've heard very mixed feelings about this, but generally speaking, now it's become an interesting way of looking at the market because when we start looking at what's the list of the hot stocks to trade and generally the number of long position that they have, you see that there's been hundreds of thousands of retail traders that came in on that herd. They're the one who basically brought that thing because most of the hedge funds, they were gone. Don't forget that this company is going through chapter 11 restructuring, so I don't know what's going to happen, but for sure this is going to take some time to filter through. And so this massive area here where we jumped from literally a low of 80 cents all the way back up to almost 650, 625, six and a quarter. We did that on massive volume, and lots of basically people are long within that area, probably even like from the gap here and things like that. So right now, and especially on that day where we had a huge volume of like 533 million shares, so lots of people are probably stuck in that range. They're long and wrong, and right now I would say probably an average price of above like $3 to $4. Right now the stock basically went down below $2, so almost 1 and 3 quarters last week. So there's still a lot of people that haven't come out on that thing, and still there's going to be a lot of like bag holders that will be looking to exit within that range, within where we're trading to then pre-market 233 and that level about just $4. So we've got loads of bag holders. There's going to be loads of resistance to go through. I'm not interested to play that, but we'll see how it shapes up. Okay, now another stock that was a big mover on the week was NKLA. So this one I traded on Monday. There was one of the big movers with huge volume that went through on that day. It was like 50 million shares, which was literally like probably 5 times as much as the usual volume. And what basically brought me into that stock was a breakout of the 52 week high. So just check. So that stock basically, opened up on Monday. Let's look at it's like a huge up conversions. Let me just basically go back to the daily 1 second and show you that basically that's one of these stocks that, there's nothing to the left. So like I said on Tuesday, I think I commented part of the trade that I had. These are sort of stock, that basically could go to wherever it wants to go. But obviously, since the beginning of May, the stock that was basically trading around just below, $14 and went all the way to almost $100. I think that as a matter of fact, on Tuesday when we talked about it, um, here the stock went. It shows like a high of 90, 93, 99, but in pre-market it went almost to almost $99. And that's, I basically just got out of everything because there was first, I had like I didn't intend to stay a long time on that thing. It would have been basically TP1, TP2. That was it. So I took a TP1 on that one on Monday, but literally I saw the market, the sort of move, supernova move, just basically hovering around the $100 mark. Usually, this $100 mark is always like this round number that attracts a lot of sellers, and I didn't really basically pay too much more attention to that. So my plan was to have a quick in and out, and that's what I got out, on pre-market on Tuesday. Then, since then, since Tuesday, the market basically, I mean, had a huge correction. I mean, that's the first 15-minute candle on the open. Basically, went from $93 to $63. Then it found some kind of support on the moving average 20, 15 minutes, and then tried it to grind its way back up. Uh, since then hasn't been doing much. So the action was really over, I'd say 1, 2 days. Really, that's it. Um, okay, and the last thing, oh, there's a couple more, and XES. Remember that's the trade that I took in the oil and gas equipment ETF. So this one was traded on Thursday last week, the 4th of June. That's why basically I came in around like 35 and a half, and I'd managed basically to take a TP1 and a TP2 on that. The TP3 that I was working was at 55 and a quarter, and otherwise, the rest of the position was on the trailing stop. I got stopped. I'm testing something these days, guys, because I've also seen that TC2000 has added this thing, and what I do basically, I've installed this thing on my screens, at least for the daily. Let me just show you. I keep it basically. Right. So you see these dots here. Let me just make them a bit so we can see it a bit better. Because I keep it on the background so that it doesn't basically. Right. So as you know, on this sort of move, like it is basically not a supernova because it's also an ETF, and the sort of position that I'm taking on this ETF is more like medium term type of trade. But it was kind of like a supernova move type of thing, and to the extent that basically the moving average trend was really lagging behind. So at that stage, I felt I'm, my moving average trend is way too far from where the market has basically come. Especially that we were like kind of like hitting towards the next price resistance around the $50 mark, and what I do is in the past I've used this sort of trading stop, which is basically they call that the stop volatility. Um, and what it does, it's basically I call that the chandelier stop. So the chandelier stop is basically a stop that will ref, find a reference to the high of the candle. So every time that basically the market makes a new high, like here, you get a new high, here you got a new high, here you got a new high. It will move along, it will trail the stop below the high, except that in this case, the reference on the, let me just check if I have, no, they don't show the formula on that one. But you see what it does? It takes the true range. So basically, it doesn't take average, average true range. It takes the true range, which is more or less what I use the average true range one, and it basically use two ATRs from the top, the high of the candle. In that case, I've looked at the formula because TC2000, I've talked to them, I've talked to the support. They sent me the company that does this thing that codes this volatility stop, and I think they calculate it to the close, not the high. But usually when you see a market like that, kind of supernova move, the close will be, quite a close, very close to the high. But I think they calculate it from the close. So every time that there's a close that's higher than the other one, they keep on moving the stop 2 ATRs below. You can use, if you want to give yourself more leeway for the stop, then you could use like 3 ATR. Uh, as you know, I like the two ATR, and especially the idea here is to, because the moving average 10 is lagging too much behind, and then if I have to wait for the market to sort of crap down all the way to moving average and go through, it's gonna be, I'm gonna lose a lot of that move. So I'm gonna be testing for this sort of moves, um, and on obviously some of the trades that I'm not intending to just scalp, but like to keep for a few days, I will start basically using this sort of volatility, this chandelier trading stop, and this is basically, the stop. This is where the stop was on Tuesday. That's why, I got executed just below that level, or below the level of 43, 43 and a quarter. Um, and I got out of the position of the rest of the position that I had. So on this position, I'd managed to basically do a TP1 and a TP2. The TP2 was around 42 and a half, and I basically got out of the rest of the position, which was almost about the same level, around 40, I think 42 and a half, 43, that level. And I didn't, I saw on this weekend that the market basically managed to come back to the support level of moving average 50 daily. It might be an interesting thing to look at this week, see how it goes. Obviously, we had a big drop as well on crude oil. That's what also. Let me just get rid of this thing here. That's the drop that we had in crude oil on DBO, the ETF, and that's what basically took most of the ETF down as well. Let's look at USO. It's going to be the same thing. So, but right now it found some support between moving average 50 and moving average 10, so it's kind of like playing ping pong, between these two moving average. I'll be checking it out, because if we manage to again uh, go above the moving average 10 daily, and we're probably going to fill the gap to $40, but it might be something that that could be interesting to get back into saddle for this market. I still feel like the this is a market where you want to put forward long positions on that. Okay. And one last trade that I talked to you about was the on the forex. And okay, so that was that we've been talking about this I think last week. That was something that I was looking at, and that was the AUD USD. So the idea is that we were basically getting into that area of where indicated here, the red area, where we have monthly and weekly cluster of price resistance, and I was looking for first setups for the MRW strategies. So the sort of trade I've been really like in and out, in and out, in and out on this trade. I mean, still the main direction is being short on that market, and let me just show you a little bit of the details on that trade. I don't know if I'd basically that's on the 15 minutes. So that was the first trade, that I took, which was again, I didn't take the level that was right in my price zone. But what I did basically, I was looking at the daily, and the daily was quite far from moving average to 10, and even further from moving average 20. And like for the MRW, usually you will wait for a turn and a break of the moving average 20. But when we are very far from it, what you will be looking for is basically a sort of an engulfing pattern, or a break of the recent low of the candles that just basically hit this peak resistance area. And the low of that candles before was 69.62. That was the low that I was looking at. Also, usually I will wait for a confirmation of the break of the moving average 50 on the 4 hour. But if it's far again, or if the move has been contained more or less, like we've seen recently, in move was trading comfortably and holding moving average 10 and 20, that was the sort of level that I was looking at. So a break of the low of the day, the previous daily candle below 62, and also a break of the moving average 1020 on that 4 hour candle, which was around like 69.81, 69.62. Okay, that was the sort of levels. What I got interested in is basically I started like counting this pair, looking at my 15 minutes. And when I saw this big candle profiling here and trading below the moving average 200, that's when I got a signal and I got my first short. 40 pips stop loss. I got a TP1 here, and I left basically my break even, which was, I think I got short like just below 80 or something like that. Then I took a second short uh, on that day. It was a short stop loss, just 20 pips just above that, and I covered TP1 here and got stopped out at that level on sorry, I got stopped out here, I think on the break even here. I don't know why they've got the candle here. Um, and then we had this massive move on the day where the Federal Reserve Chairman Powell was talking, and that on that day he explained that they were afraid about the consequences of a second wave, that they were not thinking of basically hiking rates right now or doing anything that would harm any sort of recovery. And on that day, basically on that night, we had a massive move of the dollar going down. But here I was watching, these were my levels. This was the previous highs that we'd had at 70.43. You see the market basically managed to go a little bit above that. It took a lot of stop, went through, for stop fishing, expedition, took a lot of people, and then immediately, immediately crap down. So what I did is basically I was waiting for that level for a retest, But at the same time, we had lots of volatility. You see the first candle where they started basically talking after the conference, and the candle was a very wide candle with literally a 70 pip range, which was a lot higher than what we get usually. I waited for the market to settle down a little bit, and then I saw my first 15 minutes candle going down here. And what I did is basically I took my signal, right here on the second candle at the break of the close of that candle. So I had to basically put a slightly larger stop loss because the market was quite volatile and I didn't want to basically get stopped out by the noise of the market, and managed to basically take a TP1 here and a second TP1, a second TP at that level, which was corresponding to that price support area, and basically kept a residue of a position which I covered here at 68, the round number, around 68. And the market basically managed to go back and retrace to moving average 215, at which point basically I got interested in. And also we had a convergence of moving average 215 minutes, this previous price support area that became resistance. So one short here, the stop was a smaller stop loss, 30 pip only. TP1 here, TP2 here when the market didn't manage to go back down to 68 again and retest, and then started bouncing back through moving average 10. So I TP2 on that, and again went short on that move. When we were like hovering between moving average 50 and 200, just basically curving back down, took a new short around 68.50. Again, a short stop loss of 30 pip only. Took a TP1 here and took a TP2 there on this, again, the retest of the 68 level. And right now, I've got a small residue of a short position, but that's the way that I'm going to keep on basically trading that market. I think that we've got right now more uh, some more some leeway on the way down, but we'll see. Right now, the market has found some kind of support on moving average 20 daily. We'll see if we manage to break down moving average daily, make a new low on that. Obviously, it's the next level will be closer to that area of moving average 50, 200 on the daily. So around 68.50, 67, that's where you're gonna basically start looking at covering some shorts. So looking at that one, I like to basically have been active on that trading. It's kind of scalping the way down on the 15 minutes bar chart, like you've seen. And lots of times, you're gonna have when you have this sort of move that had come from overextended move and sort of reversal move in big price areas that of big price cluster coming back to weekly and monthly. That's when you're gonna see um, this sort of like big comeback, and then these sort of moves will give you plenty of pullback entry opportunities, like you've seen on this one. So, all right, guys. So that's the end of this weekly recap. I traded also a little bit of a UV XY, but okay, for that will be for another time because I don't want to make these videos. I'd like to keep these videos 30 minutes and less, and already I've gone above that. And but again, gives you an idea of what I did, the reason why I did that. It gives you an idea of the follow up on some of the open positions or the positions that I closed down, and it helps you to understand rational position management, etc., etc. Okay, any questions? send me an email or keep the questions for one of the live sessions, and we'll talk. Have a good week.